At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
Global capital markets are changing to cope with the ever-evolving needs and demands. We are evolving too. Combining resources and experience, CGS-CIMB is a leading financial service provider in Asia. With a strong presence worldwide, we provide a truly Asian perspective. We build lasting values with and for clients. We also offer a wide range of Islamic financial services, adapting to its fast-growing demands. With our experience and expertise, we form the backbone that connect clients to opportunities through our products and service offerings. Backed by an award-winning research team, we provide solid foundations to leap from and to land on. This is our purpose. CGS-CIMB, your financial gateway to Asia.
All right. Okay. Assalamualaikum warahmatullahi wabarakatuh. A very good afternoon to everyone. Welcome to Invest Shariah Corporate Conversation 2022. I hope you have had a good lunch and fully charged, because over the next 2 hours, also, we'll go over our Shariah strategy and market outlook for 2022. And we promise that ISCC 2022 will be an impactful event for all participants interested in Shariah-compliant investing. This is in fact the second year running that we are hosting an Invest Shariah event with Bursa. And on behalf of CGS-CIMB, I would like to thank Bursa for the honor of having us as organizing partner again. Just some housekeeping before we start. The event is broadcasted and available via FB Live. We need your help as well to share this with all your friends. Okay, and the corporate presentation, this is an exclusive closed group session where unfortunately we are not able to accommodate members from the media. And participants can key in your questions in the chat box, and we'll try to answer them at the end of each presentation. Okay, without further ado, I would like to invite Puan Ruzi Rani, Chief Executive Officer of CGS-CIMB Securities, to give the welcome remarks. Dipersilakan Puan Ruzi.
Assalamualaikum warahmatullahi wabarakatuh. Yang berbahagia Datuk Muhammad Omar Swift, Chief Executive Officer Bursa Malaysia, distinguished guests and all participants. Selamat sejahtera and a very warm welcome to second Invest Shariah Corporate Conversation 2022 or ISCC, hosted by Bursa Malaysia and CGS-CIMB Securities. 2021 was a year filled with challenges. Nevertheless, as the saying goes, every dark cloud has a silver lining. Malaysia's recovering economy poses a great opportunity for investors to leverage on. The reopening of our interstate travel bans ensures a stronger economic growth towards moving forward. Globally, the importance of ESG investment has come to light with renewed focus on sustainability at the center point. Following what has been a tumultuous year brought about by the pandemic, the crisis has accelerated the need for a new way of investment, an investment towards sustainability. Meanwhile, in Malaysia, Shariah investment has taken off as it shares similar underlying principles as that of sustainable and socially responsible investing. The convergence of ESG and Shariah investing is clear, which brought about the launch of CGS-CIMB Shariah-compliant product suites, namely iCash and Islamic share margin financing, as well as our Shariah-compliant cross-border trading. We at CGS-CIMB Securities will be introducing new and exciting Islamic services and products to add to our ranks for 2022, such as discretionary trading and iFutures. As we continue our efforts to realize our aspirations to become regional leaders in Islamic broking by 2025, CGS-CIMB Securities will continue our collaboration with Bursa Malaysia via research, conferences and webinars. Our continued collaboration with Bursa Malaysia shows our shared beliefs on the importance of Shariah investment and its role to ensure a sustainable development for Malaysia. The third installment of our strategy report is available from today on both Bursa Malaysia and CGS-CIMB websites. Stay tuned as you'll get to hear more on this later when our Head of Research, Ivy Ng, presents the report in more detail. Ladies and gentlemen, I sincerely hope ISCC 2022 will enable participants to have better understanding on the importance and relevance of Shariah investment, especially in ESG, as well as our nation's sustainable development, and most importantly, the opportunities that lies ahead despite many challenges. Terima kasih, stay safe, wabillahi taufiq wa hidayah, wassalamualaikum warahmatullahi wabarakatuh.
All right. Thank you very much, Puan Ruzi, for the welcome remarks. And now, it is a great honor to invite Datuk Muhammad Omar Swift, Chief Executive Officer of Bursa Malaysia, to give the keynote address and to launch the Shariah Equity Market Outlook 2022. Dipersilakan, Datuk.
Thank you, Rashdan. Puan Ruzi, Rani, Chief Executive Officer, CGS-CIMB Securities, our distinguished panel of speakers, members of the media, ladies and gentlemen, a very good afternoon. It is my honor to address this year's Invest Shariah Corporate Conversation 2022 or ISCC 2022. Let me begin by wishing you all a happy new year. Given the emergence of new COVID-19 variants, I hope you're all staying safe and keeping well wherever you may be. Though we're still unable to convene this conference physically, rest assured that we have assembled an outstanding group of industry experts who will provide you with an in-depth look at today's discussions and topics. Ladies and gentlemen, despite the market volatility brought about by the COVID-19 pandemic, the Malaysian stock market has demonstrated great resilience throughout 2021. Last year, we recorded 30 new listings, which raised a total of 2.75 billion ringgit. and contributed 10.56 billion ringgit to the overall market capitalization of 1.79 trillion ringgit and 222 million ringgit to the overall average daily trading value. The IPO market in 2021 remained healthy and vibrant, and we witnessed companies from a variety of industries listing across 3 markets on Bursa, including real estate investment trusts or a REIT listing. In addition, the exchange saw our first secondary listing of a foreign listed company through OM Holding Limited, a company with a primary listing on the Australian Securities Exchange. We're optimistic that the vibrancy, the momentum of the new IPOs on Bursa Malaysia will continue to remain healthy this year, particularly with the inclusion of more companies from the technology and healthcare sectors, as well as companies from the halal sector that meet the demand for ESG requirements. These are important sectors and requirements that we have been promoting given the increasing demand from investors. Overall, net foreign outflows in 2021 recorded a negative 3.5 billion ringgit, while on the other hand, the securities market average daily trading value stood at 3.55 million ringgit, reflecting confidence and sentiment of investors in our market. As for the FTSE Bursa Malaysia KLCI, FBM KLCI, the index ended higher in 2021 as investors reacted positive to the news of 1100 ringgit stamp duty threshold. Although the FBM KLCI did not rank among the top performers in 2021, it was the second best performer in 2020, trailing behind Vietnam. Strong domestic liquidity also continues to support the market and the funding needs of companies listed on the exchange. Foreign shareholding remained at a healthy level, above 20%. Beyond these encouraging statistics, Bursa Malaysia has made significant progress on various key initiatives aimed at promoting the development of an efficient and inclusive capital market, while boosting our country's overall competitiveness. Some of these notable initiatives included: first, the introduction of FTSE for Good Bursa Malaysia Shariah Index to cater to the investors' demand for ESG and Shariah-compliant index solutions. Second, the launch of Bursa Malaysia Derivatives Night Trading to strengthen the linkages between the Malaysian derivatives market and the global market. And thirdly, the execution of the PLC transformation program 2021 to 2025 to enhance our PLC's performance to improve our overall market vibrancy. Ladies and gentlemen, we are proud to be a global leader in Shariah listing and investments and have been recognized for many achievements. Notably, among them is that Bursa Malaysia has been named Best Stock Exchange for Islamic listings by Islamic Finance News for 4 consecutive years in 2018, 2019, 2020, and 2021. Bursa Malaysia I, the exchange's end-to-end Shariah-compliant investing platform, is supported by 16 Islamic brokers and provides both faith and ethically based investors with access to a broad range of opportunities in our marketplace. Allow me to share some key statistics and value propositions with you. As of December 2021, 747 out of 949 listed companies, or some 80%, are Shariah compliant. Shariah market capitalization of 1.22 trillion ringgit makes up 68% of the total market capitalization of 1.79 trillion ringgit. The average daily trading value of Shariah-compliant securities makes up 79% of the overall average daily trading value of 3.55 billion ringgit. And our FTSE for Good Bursa Malaysia Shariah Index, which was launched in July 2021, comprises of 57 constituents that are both ESG and Shariah compliant. We continue to observe that our Shariah indices have consistently outperformed its conventional counterparts over the last 10 years. For example, FTSE Bursa Malaysia Hijrah Shariah Index, comprising of the 30 largest Shariah-compliant companies on FTSE Bursa Malaysia EMAS Index, has consistently outperformed the FBM KLCI, growing approximately 22.7% between 2011 and to 2021. These are just some of the indications of the value Shariah-compliant investments can provide to investors. Ladies and gentlemen, there is much potential and opportunity to grow Shariah investing due to the profound similarities of Shariah investing and socially responsible investing. They both focus on encouraging more ethical and responsible and transparent practices. Based on the Sustainable Investment Review of 2021, global ESG investment increased 3.5 times in the last decade to $1.3 trillion US, or 146.85 trillion ringgit. This is the equivalent to a compounded annual growth rate of 13.5%, while total assets under management of Islamic funds grew 31.9% in 2020. The similarities between the environmental, social, and government, or ESG, and the principles of Sharia open a wider choice for investors looking for opportunities in a broader, socially responsible investment space. As a result, choosing investment activities anchored on Sharia and characterized by long-term socially responsible perspectives build greater stability and ensure socio-economic well-being of our nation. This will be considerably broaden the appeal of Sharia investing. On the bigger picture, the potential for Islamic capital market remains promising, not only in Malaysia, but also internationally. Islamic finance is no longer the domain that caters to Muslims only globally. It has grown to some USD $3.4 trillion industry. The Malaysian Islamic capital market indeed has much to offer. It has a resilient financial system, an innovative ecosystem that is accessible globally, as well as a supportive government on initiatives that can enhance the country's position as a global Islamic hub. Ladies and gentlemen, in conjunction with today's conference, we're pleased that CGS-CIMB Securities will be launching their Shariah Investing Strategy Report 2022, titled Every Dark Cloud Has a Silver Lining, a Sharia perspective at this event. As the title suggests, much like any challenges in life, we will overcome the obstacles that have resulted from the pandemic, and the good things will come out of these challenging times we're currently experiencing. The Shariah Investing Strategy Report aims to bring a multitude of benefits, generating investor interest in Malaysia's Shariah-compliant equities market and increasing the visibility, transparency, and investability of Malaysian Shariah PLCs. Its content will reflect up-to-date and relevant information, which includes in-depth analysis and performance of Malaysia's Shariah-compliant equity market, key thematic plays and stock picks, and investment strategies. While research reports on PLCs are commonly available, there are few and far that focus solely on Shariah PLCs. The exchange aims to address this gap and is committed to facilitating better value recognition and growth of Malaysia's Shariah-compliant equity market. Bursa Malaysia will continue to develop the Islamic capital market through continued product innovation and strengthening of the ecosystem to add further depth in our Shariah-compliant product service offerings. Before I conclude, allow me to congratulate CGS-CIMB Securities, our co-organizer of Invest Shariah Corporate Conversation Series, on their efforts in educating the public on Shariah investing. I look forward to the market outlook presentation by CGS-CIMB, as well as the corporate presentations by Bank Islam, Malaysia Berhad, and QL Resources, which will take place shortly. And on that note, I wish everyone a very productive and impactful afternoon. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you, Datuk, for that wonderful keynote address and launching the Sharia Equity Market Outlook 2022 report. Okay, next, I would like to invite Ms. Ivy Ng, Head of Research, CGS-CIMB, to walk us through the just launched report and, more importantly, what to expect this year. We are sharing the link to this report in the chat box, and it's also available on Bursa website. And once again, you can key in your questions in the chat box as well. Anytime during the presentation, I will try to answer those questions if time permitted. Okay, over to you, Ivy.
Yep, thanks a lot, Roshan. And afternoon, everyone, and a belated Happy New Year. So I will be going through the research report. And this report basically looking at the outlook for the Malaysia equity market, but from a Sharia lens perspective. So on a summary, we are thinking that 2022 could be a slightly more challenging year for the market, but not to worry too much because we do see some support for the market, and I will take you through some of the potential headwinds as well as why we feel that downside to the market could be supported by some of the positive development in our market. And then I will take you through some of the trading teams we are recommending investors for 2022. We have up to 6 trading teams, and some of the sectors we liked as well for 2022. Now, in terms of the top 3 picks from top 3 Shariah picks, we have Bank Islam, Inari, and Kilo Resources as our top 3 picks for 2022. Okay, so basically the report covers the outlook for the market, the target KLCI for 2022, and we currently have it at 1612. I will also touch on some of the policy events to watch out for in 2022 that we think could shape some of the industry in Malaysia. And then we'll take you through how we screen the picks from the key thematics. And I will also take you through some of the sensitivity to our KLCI target. Okay, but before we start, if you just take a quick look at the Shariah-compliant PLC in 2021, you've seen that the percentage of stocks listed in the stock market that are Shariah compliance has remained unchanged at 79%. So if you look at the Shariah compliant stocks, you'll find that a majority of the companies are in the industrial and consumer products sector. And there is increasing interest in Shariah investments, which you can see from the statistic here. The percentage of Islamic asset under management have grown from 2017 to November 2021, as well as if you look at the Islamic unit trust size, you've seen that expanded as well over the years. Now, a quick recap on what happened to our market in 2021. KLCI fell about 3.7%. This is due to a couple of reasons. We have movement control orders roughly for the first 8 months of the year. Vaccination progress was slow, and they are concerned about high COVID cases. So that has resulted in the market coming off, I think, in the early part of the year. On top of that, we have challenges relating to ESG issues, and there are a little bit of political uncertainty. Also, the glove rally that did very well in 2020, we saw a lot of the glove makers' share price correcting last year following their outperformance in 2020. Now, towards the end of the year, we have challenges coming from higher tax measures announced in Budget 2020. So overall, I think we ended the year with a decline of about 3.7% compared to 2020. Now, for 2021, in terms of fund flows, we saw that the local institutional and foreign investors were net seller, but the retail investors were net buyer in the market. And in terms of KLCI performance against the Hijrah index, which represents the top 30 stocks that are Shariah compliance, I would say that one of the reasons why the KLCI outperformed the Hijrah in 2021 was due to the fact that the bank did quite well. That benefited KLCI performance. But for the Hijrah index, it was partly showing a higher decline in KLCI due to the fact that the glove companies were seeing some correction in their share price. Now, if you look at the performance of KLCI against Hijrah Shariah index, you will find that the Shariah index actually outperformed KLCI in 7 out of the past 11 years. And this is just to share which are the top companies between the two key indexes. So you can clearly see that KLCI have heavy weighted more on the banks, but on the Hijrah Shariah index, the heavy weights in terms of weightage would be the likes of your Tenaga, Petronas Chemical, and Press Metal. If you look at the weightage as at the end of December 2021. And this is just to capture some of the performance of the various sectors in 2021. You can clearly see that technology was the top performing sectors, but on the other side of the equation, you have the healthcare sectors, energy sectors underperforming, and that has been part of the reasons why the Shariah index did not perform as well as the KLCI. Okay, and Malaysia market relative to the ASEAN peers, I would say that we have underperformed in 2021, and this is due to partly to the fact that we are the only market that had a positive return in 2020 as we benefited from the glove maker rally, but that has corrected in 2021, so that partially affected our performance in 2021. Now, let's just take a look at the foreign fund flows. I think in 2021, one thing to know about foreign fund flows is that although it's a fourth consecutive year where foreign investors have been selling in Malaysia, but if you look at the net outflow for 2021, it's the lowest in the past 4 years. So if you look at the foreign fund outflows for 2021, it was around 3.3 billion. This is significantly lower compared to outflow of 23 billion in 2020. And it's also much lower compared to the outflow in 2018, 2019, about 11 to 12 billion. So what it suggests to us is that, the foreign fund outflow have declined, partly because foreign shareholding in Malaysian market is close to its low post the global financial crisis at roughly about 20.4%. Now, if you look at market participation trend, and not looking at just foreign investors, but also retail, local institute, and so forth, what we notice is that in 2021, the retail participation in the market has come off, and that's partly because, I suspect, due to the end of the glove rally, and we saw foreign investors' participation improving towards the end of 2021. Now, if you look at the fund flows, I think one interesting point that I want to share is that if you look at the chart on the left, this actually shows you the net buy and net sell by the 5 investor group that we are able to break up from statistic. What you will find that is interesting is that local institutional investors were net seller in the past in 2021 and in the second half of 2021 as well as first half of 2021. And there is a change in trend from what used to be a net buy position for local institutional investors. So we suspect that the net outflow of funds or the net sell by local institutional investors could be due to partly to the EPF, one-off EPF withdrawal schemes. And we do expect that local institutional fund flows will turn to positive in 2022, as we expect some of the inflow of funds from EPF members to be restored in 2022. For the retail investors, you can see that there's a sharp increase in the net buy from retail investors, but they have come off slightly in the second half of 2021. And for the foreign investors, what is interesting is that they have turned net buyer in our market in second half of 2021. So it seems like foreign investors are returning and turning a bit positive on the Malaysian market towards the later part of last year. It could be due to our valuations and the fact that we are expected to see an economic recovery in 2022, and we have been lagging in terms of performance compared to some of our peers. So there is some positive development on that front. Foreign investors seems to have some interest returning to the Malaysia equity market. So we just want to share that we also collated data on net buy, net sell of the various group of investors by sectors. So you can take a look at them to see which sectors are favored among the 5 group of investors for 2021. And we've done that as well for the KLCI constituents. So you can see that, for example, CIMB was the #1 net buy for foreign investors in 2021. And the key sellers for CIMB in 2021 were the local retail and local institutional investors. We have also looked at the top 20 net buy and net sell lists for key investors in terms of Shariah stocks. So we have screened these names, and these names only include Shariah-compliant stocks. So you can see that in terms of, say, local institutional investors, their top buy stocks, top buy stock for Shariah will be MIC, Dialog, and Gamuda. And for foreign investors, their top buy for Shariah stock will be Petronas Chemical, Inari, and IHH for 2021. Okay, in terms of market outlook, we are concerned about several challenges. One is, of course, the ongoing Omicron virus that's happening around the world. Why we are concerned about this is we are slightly concerned that should this virus, turn into a new COVID-19 wave, there could be some movement restriction measures put in place in Malaysia. We don't think that will happen, but if that risk do happen, there could be downside to our market, because I don't think investors are anticipating any potential movement restrictor measures for Malaysia in 2022 in their earnings expectation. I think the strong point for Malaysia is that we have very high vaccination rate. We have vaccinated around close to 80% of our population, and about 40% of our population have received their third booster shot. So I think Malaysia should be quite defensive against the Omicron concern. Then there are several concerns relating to potentially less liquidity on market, because we are expecting 2 rate hike in the second half of this year. And we are slightly concerned about higher transaction costs for investors due to the higher stamp duty that was announced in budget 2022. And also with regards to the US taper, I think we should keep a close eye on whether there are foreign fund outflow due to the Fed taper or the US rate hike that market is expecting starting from perhaps the second quarter of this year. We will also be keeping a close eye on corporate earnings risk. This is due to concern over higher operating costs, logistic costs, as well as taxes like the prosperity tax in 2022. And the last potential risk to our market will be political risk, because there are some expectation that GE15 could be held in 2022. However, we are of the view that the downside to the market could be capped, because we are expecting stronger economic growth for Malaysia due to reopening of borders, international borders gradually over 2022. We also expect domestic institutional funds like EPF to have additional liquidity available to them, and that could be invested in the domestic equity market, since the one-off withdrawal schemes that was introduced during the various stimulus measures will be has ended in 2021. The last point with regards to why we think the market on the downside will be supported is because we felt that the KLCI is trading at relatively undemanding valuations. They're currently trading at about 1.5 standard deviation below its mean, suggesting that market has taken into account some of these concerns that we have discussed earlier. So on an overall basis, we think the market may be volatile in 2022, and this should offer trading opportunity for investors who are looking for bargains in the stock market and have a medium-term view on the performance of some of these companies. Okay, and in terms of stock selection, we will advise investors to look for stock with strong pricing power, strong management, and in a sector that are showing growth in 2022. So I will just later on share with you some of the policy events and some of the key events to watch out for 2022. But like I say, one of the strong points for Malaysia is our high vaccination rate, and that should help ensure a smooth reopening of the borders between Malaysia and other countries throughout 2022. Now, sectors that will benefit from this reopening will be generally your retail, consumer, property, construction, REIT sectors, generally those sectors that have suffered last year due to the MCO and so forth. Okay, in terms of the local institutional investors, flows we noticed that local institutional investors have been a net seller in the market in 2021. The local institutional investors have been a net seller in the market in 2021. We think that they could turn net buyer in 2022 as some of the withdrawal schemes have ended. And we did this chart. Basically, it shows you the various fund flows for institutional investors against some of the EPF withdrawal schemes. And we noticed that since the end of the last withdrawal scheme, the net fund flow for institutional investors have turned positive. Now, in terms of the Omicron virus, there are some concern that this could be a potential threat to our recovery. But in our view, should this Omicron become a concern, there could be some companies that could potentially benefit from the potentially a rise in COVID-19 cases due to Omicron. And a potential beneficiary could be Pharma Niaga, because if there's a rise in the COVID-19 case, there could be a rush for a booster shot. This could benefit in terms of sales of vaccine by Pharma Niaga. So another potential beneficiary would be the likes of IHH if there's an increased demand for COVID-19 related services. Now, with regards to the US taper and potential hike in US interest rates, our view is that this time around, we are not likely to see as high foreign fund outflow compared to the previous taper, simply because if you look at the foreign shareholding in Malaysia equity market, it's close to its all-time low since the last global financial crisis of 20.3%. So currently our foreign shareholding is 20.4%. So if there's a potential outflow of funds, I think we should watch out for some of the stocks that foreign investors have been buying last year, the likes of Inari and so forth. There could be some potential selling pressures on some of these stocks in 2022, should there be a foreign fund outflow, but our view is that the impact should be much smaller compared to the previous US taper. Now, just a little bit on some of the regulatory measures. We have stamp duty hike kicking in to the market in 2022. We think that this could, affect sentiment a little bit in the market because of the higher transaction costs. So that could affect a little bit of retail interest. We also, the government have also lifted the ban on intraday short selling. So what we want to share is that if you look into the history of short selling before the suspension, we do notice that this intraday short selling as a percentage of overall short selling in the Malaysian equity market is quite significant. So what we expect perhaps from the lifting of the ban on intraday short selling is to create more volatility for the Malaysian equity market. Now, in terms of corporate earnings for Malaysia, we are looking at corporate earnings, KLCI earnings to decline by about 5% in 2022. And this is due to a couple of reasons. One is we are expected to see higher corporate tax for Malaysian corporates because of Cukai Makmur. We also expect glove makers' earnings to decline in 2022. So that also led to KLCI earnings to decline. And lastly, we do expect commodity price to be weaker in the second half. So that also contributed to our expectation of weaker earnings for KLCI in 2022. In terms of key policy events to watch, we mentioned that one key event to watch is the government's decision on whether to continue with the planned rollout of 5G via the single wholesale network model. This is something that we expect perhaps the government to announce probably sometime in January this year, or perhaps if not February. The other key policy events to watch is whether foreign workers will be trickling back into the country. I think the government has given the green light, but I think it's just a matter of timing. We also will be looking at how Malaysia plans to rectify the ILO, to eradicate forced labor in Malaysia. So that is something to watch out for as well in the first half of this year. And lastly, I think Bank Negara is expected to announce the winner of the digital banking license sometime in February or first quarter of this year. So I think there'll be a lot of interest to see who are the winners and how this will impact the banking sector in Malaysia. Okay, on the construction side, we'll keep a watch on the MRT3 project because I think if the project is rolled out, it could potentially change a view about the contractor in Malaysia. So that's something to watch out for as well in terms of policy events. Now, if you look at GE15, I think if GE15 is called, our view is that there could be some short-term uncertainty in the market because the investors could be a bit more defensive as they are uncertain about the potential outcome of the election and its potential impact on the market. So we could see a little bit of volatility should GE15 be called this year or next year. Now, in terms of key trading themes, we have the first one is the beneficiary of an OPR rate hike, and this is on the back of our expectation that there'll be a rate hike in the second half of the year. Our view is that if there's a rate hike, the key beneficiary could be the banks, and among the Sharia compliance banks under our coverage, we like Bank Islam. It also formed one of our top 3 picks for our pick for 2022. So we have also done some screening on stocks that have high net cash position. We also think that these companies could potentially be a beneficiary as they enjoy higher return on their cash pile due to higher interest rates in second half of 2022. And then we have a team called Value and Laggards. So here we are looking at stocks which have low price to book value and also have been a laggard against KLCI. And we take a view that if these stocks gravitates closer to pre-COVID levels, then there's a potential upside to these stocks for investors who are looking for value and laggards. So I think you've seen like property names, construction names like UEM, HSS, and Star Media as some of the stocks featured in our value and laggard play screening. Okay, the next thematic is recovery, and under recovery team, we're looking for stocks that exhibit strong earnings growth relative to in 2022 and 2023 relative to 2019. These are stocks that we have an egg call in our list, and they are showing growth post-COVID. And those stocks that meet this criteria, we have highlighted them here, and you will see tech names featured in some of these recovery play. Another thematic we are proposing to investors would be EV play. This is a long-term trend, and there are some companies in Malaysia that could benefit from this trend. So our tech analysts have chosen MPI and Genetech as some of the names in Bursa Malaysia that could benefit from EV play. And that would be some stocks that we recommend investors to look at. Now, in terms of ESG picks, what we have done is basically look at ESG scores for all the companies under our coverage, where we have an ad call, and how they rank with regards to scores by third-party assessors. So those that have high scoring across all third-party assessors, ESG ranking will be ranked as our ESG pick. So based on this analysis, we have MIC, FNN, Hatta Legal, CIMB, and Telecom among the 5 picks, which we think will have high ESG scores from third-party assessors. Okay, then another thematic will be dividend yield. I think that even though interest rate is going up, but I think some investors will still want to, but the interest rate remain low. So I think some investors would want to look for stocks with high dividend yield because it could form a support for the share price in times of volatility. And so we have screened for stocks with yield of 5% and above here. And you can see the top dividend yield names are the likes of Malakoff, Taliworks, Uchi, IJM, and MSM. Okay, and let me just mainly take you through the valuations. Our market, I think on valuation perspective, is not expensive because we are trading at one standard deviation below the mean. And if you look at the sensitivity, currently we have value KLCI at 14.3 times PE. So that gives you a KLCI target of 1612 at the end of 2022. However, if you're more positive on the market and you think that KLCI should trade at perhaps mean PE, then the KLCI target will be 1832. But currently we are pricing at 1.5 standard deviation discount to the 3-year mean, simply because we are concerned of earnings risk as well as political instability. Okay, if you look at KLCI relative to regional markets, you'll find that we are showing negative earnings growth, but other markets are showing positive earnings growth. I just want to explain that the reason is partly because we have rubber gloves makers in our index, and they are showing earnings decline. We also have prosperity tax affecting earnings in 2022. And also we are expecting commodity price to come off a little bit in second half of the year. So that contributed to the negative earnings growth for our market in 2022. So I'll probably end with our top 3 picks for the Malaysian market from a Sharia perspective. So we like Bank Islam. We think that they have one of the strongest loan growth among the banks in the market. They're also going to benefit from the higher OPR rate, and we expect earnings to grow in 2023. So that's why we like Bank Islam. Another stock that we like is in the tech space, which is Inari. We think that they will show strong earnings growth from 2020 to 2023, and they will benefit from the EV play as well. And lastly, a play on the consumer sector where we expect pent-up demand. QL Resources will be our pick simply because share price have come off, valuation looks attractive, and we think that they offer attractive proxy for investors who are looking at the recovery in consumer spending. So I'll probably end here and pass the session back to Rashdan.
All right, excellent. Thanks, Ivy. I think there's a lot, quite a lot to absorb there from your report. The report is available on Bursa and CGS-CIMB website, and you can also click the link in the chat box as well to get access to this report. So to everyone watching us on FB Live, many thanks for joining us in today's event, and we look forward to seeing you again soon. Please contact your reps at Bursa and CGS-CIMB should you have any further inquiry on Invest Shariah Conference. All right, okay. Next, we would like to invite QL Resources Berhad, one of our top picks this year, for the first corporate presentation. This session will be moderated by Walter Au, our analyst at CGS-CIMB. Over to you, Walter, for the introduction.
Okay, good afternoon, everyone. Welcome to Invest Shariah Corporate Conversation. My name is Walter, analyst at CGS-CIMB, and I will be the moderator of this session today. On behalf of CGS-CIMB Securities Malaysia and Bursa Malaysia, I would like to welcome everyone to this session with the management of QL Resources Berhad. From the company, we are honored to have with us Mr. Freddie Yap, Senior Manager, Financial and IR, as well as Ms. Lee Hui Ting, Sustainability Manager. On the proceedings of this session, we will start off with a presentation, followed with a Q&A session. Please take note that we will be taking questions post the presentation, which will be via the Q&A box or the chat box. Please feel free to type your questions in throughout the presentation. Okay, over to you, Freddie, to kick off the presentation.
Okay, can you see the chart? Can you see my, Walter, can you see my slide?
Yes, we can.
Yeah, I noticed that just now in the Ivy's presentation, QL share price was 50 cents.
No, Freddie, I think there's a typo there. Our target price is 550 cents. So we're missing a 5 ringgit in front.
So I was just wondering why I should be presenting QL.
Don't worry, Freddie. Okay,
No,
Freddie,
just joking, just joking. It's typo error.
Freddie, do you mind if you open up your slides to become a full page? Currently, we are seeing your presenter view. You can press on the 3 dot, I think there, you see the bottom there, and then press on the hide presenter view.
Okay.
And then you press the full screen on the bottom right again. Yep. Or maybe you can stop share. Yep. Press it again.
Can you see?
Okay. Currently, Freddie, I think one way you can do it is you stop sharing, and then you press that button, and then you add the whole screen in.
Not quite sure how to do this.
Okay, Freddie, you just press the full screen again. Yep. Just now the same button you pressed earlier on, the full screen, where that next to the comments, the far right multi-con. That's not the same one you press.
This one?
Yes, on the right. Yeah, try again.
But this is this full screen yet? No, Chad.
Not yet.
But is it not on presentation mode?
No, Freddie, I suggest to you, you stop sharing first, and then you turn this into presenter view. You stop sharing first.
Okay.
And then you open up the slides on the presentation to become the full presentation, and then you share screen to that page.
Full presentation.
Yep, and then you press share screen and select that page.
Is it full presentation yet?
Then you press share screen now and select on the full screen.
Okay. Sorry.
Don't worry, Freddie, we understand. Okay, press it again. Just press resume lah. I think that's fine as now. Let's okay.
Still not yet.
Still not yet, Freddie. I think when you press the share screen, it's supposed to be pressing on the one that is the presenter view. But it's okay, Freddie. I think just go ahead lah. It's okay lah. I think we can see from here.
Can you still see?
It's a bit small. It's a bit small lah. But I mean.
Yeah, but we can. Yeah, we should be able to see the numbers are a bit small. But I think in the interest of time, probably we can start. Freddie.
Okay. Sorry. Should have asked my staff to help me on this one. The last time I did it, it was okay. But this chart talking about sailing and weather and the sea. This year, COVID-19 has been a very challenging year for past 2 years. COVID-19 has been a challenging year for QL Resources. So we actually have so many years of experience of sailing through all these crises, which every year also we sail through. But last 2 years has been very challenging because of all this lockdown and SOP. And yet I think we have done well. Consider we have done well. Still, QL still make money, maybe not so much, but hopefully next year, FY 2023, that is March 2023, our result will be much stronger. So again, the 4 segment is marine, livestock, farm, and the convenience store. All these are essential goods. So, and coupled with the fact that we are not affected by the proposed prosperity tax, which is maybe 1 or 2 subsidies near it, but still quite far away. So talk about marine, which is the top earnings for the group. This is our jewel in the crown. I think in a number of years' time, probably Family Mart will overtake it in terms of turnover. So currently we are number 7 in the world in terms of surimi-based product, leading the China and Japanese companies. So Give us another 3 years, we'll be number 5, I think, in terms of surimi-based product. Many of you have been to our factory in Hutang Melintang or in KK, but nowadays there are so many fund managers and analysts. I'm very sure many of you have not been to the new factory. Hopefully in the near future, Walter will take you around to the factory and get to taste our product, get to take back some fishbowl range product. So again, MPM is a very long value chain business. We do fish paste, we do from the fish paste, we do fishball, chill and frozen. We also convert the waste into fish meal, where you do fish feed and aqua feed. We are also Malaysia leading deep sea fishing player, purse seiner, which is surface water catching. So it's very ESG in nature. And then to lengthen the value chain, prawn aquaculture is basically not affected by supply. You grow your own prawns. So this business model is in the past, there is always constrained by the supply, but demand always outstrips supply. Therefore, if you were to analyze the margin, the MPM margin is always from day one up to now, it has grown from 8% to currently maybe trending towards 18% PBT margin. These are some of the production slides. So you can assume that this is 70% capacity. So we are building more factories in Hutang Melintang and Surabaya. So a bit of update here. So prawn aquaculture, the new place will be in Bukit Kota Belud, between KK and Tuaran. This is the prawn aquaculture. Surimi-based product next to our current plant in Hutang Melintang. So this is the new state-of-art surimi-based product. So next 5 years, 400 million capex, a lot of automation, less reliant on labor. So this one hopefully in stages, maybe we can see it under construction next 2 years, I think. Indonesia, a very big market for surimi-based products. So we already started constructing this new plant. So we hope that in the next 5 years, it will be a leading brand in Indonesia. Sustainability, all solar rooftop, all been completed for MPM. So outlook, I think just to quicken it. So overall, I think outlook for FY 2022 will be experiencing a strong recovery, because Q1 and Q2 in Q1 the PBT margin for FY 22 was 15%, Q2 18, Q3 ending December, I suspect it will still be 19. So definitely for MPM, Q1 results, Q2 result is stronger than Q1. Q3 result to be announced will be definitely stronger than Q2. So you won't lose sleep over this segment of the results. Likewise, for integrated livestock, excluding Family Mart, which I think Family Mart will be segmented out this financial year. So in terms of poultry-related activities, the business model is split into two. One is poultry farming, one is raw material trade. So the raw material trade will experience a strong profit this financial year, because we sell raw material to all the poultry players in Malaysia. So as you can see, a lot of poultry players also calling for help, because commodity costs has gone up 30-40% in Malaysia. So a lot of poultry, their cost of production is very much higher than the control price at the moment. So you will see poultry players experience losses in Peninsular Malaysia basically. But luckily, we don't have all eggs in one basket. So we operate in Indonesia, Vietnam, East Malaysia. So those areas are getting better. In fact, has not experienced losses. Vietnam itself, due to the lockdown last December month, is showing recovery. Likewise for Indonesia as well. Just to show our egg production 6.1 million, so we are all over the place. These are the production figures. And then this is the update on where we're going to, expanding Indonesia, Vietnam, and DO chicks. So outlook, I think it will be mixed for FY 2022. Peninsula, I think if the government stop the price control, maybe by early February, I think the Peninsula result will start to move up. So hopefully it will be mixed for FY 2022. Palm oil and clean energy this year will be the full year consolidation of Boilermac. So in terms of Boilermac, now a lot of things to write about ESG, what they're doing in terms of water, renewable, and biomass activities. So outlook, I think this year, taking into account last year's poor result, this year likely to be mixed to positive. Boilermac, I think in terms of project installation and all those things, still slightly affected by supply chain issues such as the supply of steel, but hopefully it will continue to deliver in the later part of the financial year. Again, I want to remind that all our operations not impacted by the recent flood here. Maybe 1 or 2 Family Mart stores, I think. So Family Mart target from day one, we announced we're going to hit 300 stores by 31st March 2022. We are on track. Now it's about 270 plus, I think, stores. So we are there. Of course, this year we also launched our vending machines. So it's now about 13, 14 vending machines throughout the highway. Subsequently, we will probably introduce more along the highway, maybe in hospitals, maybe in factories and all those things. Yeah. Second, Central Kitchen has already started some activities, but full completion will be Q1 of FY 2023. Sorry. So outlook, I think outlook looks to be quite bright for Family Mart because it's no longer have this lockdown and all those things. So it's getting quite exciting actually, this segment. Yeah, and also quite exciting. And of course, we can introduce again the long value chain. We can introduce a lot of our factory products in Family Mart. So nowadays we also introduce bigger store format, more products from our factory in Hutang Melintang, frozen prawns, frozen based product, things like that, and then the new range of Oden. So strategic team over the years that I've been with QL is always we have expanded to regional. That's why we are in Vietnam. We are in Vietnam, Indonesia, Peninsula Malaysia, East Malaysia. Value chain, you can see our MPM have strong, very long value chain, livestock as well, Family Mart as well. So convenience store is the one that is very long-term scalable business. So this is something that is quite exciting. Sustainability, of course, our journey. We have established a 3 years roadmap that will strengthen our foundation and improve our performance. So in terms of environment, we target to reduce 20% of our GHG emission from FY 2020 baseline to by FY 2026. Hopefully, we one day will be included in the Bursa FTSE for Good index. Yeah. Social, labor practice and all those things. So it's, I think we are probably quite strong in terms of delivering nutritious, high quality products to consumer. Governance, again, if you were to look at in terms of governance, our board diversity is the female directors are more than 30%. So I think if you sit in the board, I think the independent director exceed the executive directors. Some ESG highlights. Of course, all the time we invested in renewable energy, wastewater. I think to highlight recent flood, we donated food and drinks to the flood victims with collaboration with government and NGOs. Last year, we did our first integrated report for FY 2022-21. So this year, we will also be doing more on this. All the global reporting initiative standard, we already started, so we will do more this financial year. For FY 2022, we have started the Health and Nutrition Committee to oversee food quality. So these are quite relevant with the Sharia, rules and all those things. So in terms of achievement with SAM and MSCI, our rating is not too bad. With SAM, we are above industry average of 27, and we still maintain our BB for MSCI. So overall outlook, being a consumer food business, at the toughest time during the COVID, we have a lot of supply chain issue, convenience store closed down, capacity must be restricted, things like that. So we are getting better and better, stronger and stronger. So I think we will have a good recovery of Q3, Q4 against Q1, Q2. And furthermore, if you look further ahead, FY 2023 will be a very much stronger and better year, maybe even continue into FY 2024. We believe that we have the management capability to continue to perform. With that, thank you very much. Walter, let you take over for questions.
Thank you, Freddie, for the presentation. Very short and sweet that covers all through the sectors, sub-segments that QL has. So I'm going to move straight to Q&A session. Again, if anybody have any questions, please feel free to type into the Q&A chat box, or you can alternatively write into the chat box. So please go ahead. I'll start with some questions for Mr. Freddie. In terms of recent raw material prices, can you share with us the quantum of raw material prices experienced in the past 6 months, and how has Family Mart moved to mitigate this situation? Has Q actually raised their selling prices for their products, such as surimi or poultry products?
Talking about raw material, let's look at the three main segments of MPM, livestock, and Family Mart. MPM, of course, raw material is mainly fish. Okay, so it's local. Okay, not much impacted. And then coupled with the fact that we export a lot of our fishball related in US dollars. So the impact of raw material increase, especially importation of foreign raw material, things like that, is quite minimum because we sell in US dollar, buy in US dollar. Coupled with the fact that nowadays domestically as well as export, we sell higher margin surimi based products. So you can see that MPM, especially the fishball range, the margin will improve even in this challenging time. So not much worries in the MPM sector. Likewise, the livestock, of course, that's the one that get hit by increase in international commodities such as corn and soybean meal, because Malaysia import 100% corn and soybean meal from South America, from US, from wherever. So 70 to 80% of this of the poultry cost is raw material. So So it's raw material. So in terms of soybean meal and corn, it has gone up about 40 to 30% respectively. So Q1 and Q2, the ILF did poorly is mainly because of this. The selling price, especially in Peninsula, is hit by these margins. Okay, by this our cost of production going up 40%, and the cannot pass on to the egg price. Likewise, cannot pass the egg price, and coupled with the fact that normally in Malaysia, 1 year there is 2 price control, maybe Chinese New Year, Hari Raya, Christmas, where they control the egg price. But normally this type of egg price is higher than your cost of production. But this year, because of COVID, flood and everything, the government suppressed the egg price, so and the poultry price. But luckily in Peninsula, we don't do broilers. It will hit the broiler player. But for Malaysia, for us, we are a main egg producer, so it affects our egg margin. So that's why in Q1, Q2, up to September, maybe up to November, and towards December also, our egg performance is not so good. But again, luckily we are okay in Indonesia, Vietnam, and East Malaysia. So this year is the year of triple whammy for ILF, basically for the poultry producer, basically. First of all, especially eggs. Eggs is the cheapest form of protein in Malaysia. So a lot of foreign workers have left. So consumption has dropped. And during MCO, a lot of kopitiam restaurant has closed. Egg consumption dropped. So the egg price also cannot pass, the cost cannot pass on to egg because of drop in consumption. Likewise, the export of eggs by those Singapore, those southern producer of eggs in southern peninsula, instead of selling more to Singapore, they are Singapore buying less, and then the eggs flood back to the northern, the other part of peninsula, causing a depression in egg price. So this is the year of triple whammy, actually. No consumption, less export, not commodity increase, and all those things. So very, very challenging, actually. So that's for ILF. Likewise, for Family Mart, is not that bad because the margins can be passed on, especially when you look at, you just fine tune a bit more, you sell a bit more RTE, more food-based F&B and all those things. The margin actually for Family Mart has increased for this financial year. So going forward, FY 2023, if everything normalized, we will probably see very strong growth in these 3 segments. Yeah. Thank you.
Okay, Freddie, can I just ask in this context of higher raw material prices, have you guys raised prices of your MPM products? I understand there's price control over chicken egg prices. How about your sales of feed costs? How about your surimi sales? Have you actually raised prices?
Yeah, fish ball range, yes. Both domestic and local, both domestic and export, we raise prices.
Any quantum to share?
Not much, 5% maybe. Yeah.
Understood. How about you for your feed costs, your sales of feed costs?
Feed, we don't sell complete feed, we sell raw materials, so everything is cost plus.
Okay, understand. So basically there is an element of increase there as well, given the increase in raw material prices. Okay, Freddie, I remember in the first half of FY22, there was issues with the MPN segment in regards to shortage of foreign labor that has resulted in less fish landing and catches. Have that situation been resolved moving towards second half FY22 onwards?
Yes, our crew has all come back, so we are operating as normal. But of course, now towards January, now it's Chinese New Year time. East Coast is monsoon time, so the crew should be resting now. So it's all maintenance. So the deep sea fishing activity will be less, but then the manufacturing of fish ball activity will be more like.
Understand on that, Freddie. So basically, whatever labor issues faced in the MPN segment that drag performances in the first half FY22 has been resolved, moving to third, fourth quarter of the financial year. Okay, understand, very clear on that. Thank you so much. Also, in terms of your MPM segment, you spoke about expansion with the new automated surimi plant coming on board. Can we understand, is that because there's a capacity shortage, or is because there's a more variance coming to the market for QL?
Not more players. It's actually actually expansion. Normally these type of activities in terms of manufacturing, you need to continue to innovate, use more robotic, use less labor to introduce new product and all those things. So state-of-art activities. In terms of competition, I think we're not too worried. Simply because you want to do a factory like Hutang Melintang in Perak, it's just too costly for small players. Simply because you have to do all the certification requirement. Okay, just talk about the halal certification, it will kill you. You know. Likewise, we are at FDA certified, US lagi teruk, EU certified, HACCP, all those things. So it is very difficult. Small players generally have the disadvantage because before you start business, you already have to spend millions, complying with all these certifications. So, but because we are a listed company means must grow. So you continue to grow, you build capacity, you become more efficient, things like that. I think the brighter side, as we continue to dominate Malaysia domestic market, we also make sure that our export overseas continue to be maintained. Likewise, in Indonesia, why we build a new surimi-based plant is because the potential for the domestic market is huge. When we built the pilot plant was very fast, overwhelmed by orders, so we have to build new plant. So things are like that. Still quite bright in terms of our MPM business. Yeah.
Okay, understand. Thanks, Freddie, for that. I think let's move on to Family Mart, which has been a shining star in terms of revenue and also growth for QL. Freddie, please drink some water. You look thirsty.
Yeah. Wait. Family Mart. Did I write something here? I'm not sure. Yeah, drink some water. Wait, shoot.
Yeah, Freddie, Russia. There's actually a couple of questions in the Q&A box. First, how do you see the competition between Family Mart and CU, and also any plan to transition Family Mart business model towards franchise business, among other things? Yep.
Come again, what's your first question? I missed it.
Competition between Family Mart and CU.
Or with other players.
Yeah.
Although they technically call competition, but we differentiate ourselves from them, basically. We Japanese model. We have our own central kitchen from day one. So I still remember day one, 5-6 years ago, we announced we're going to do Family Mart. Some competitors said, QL don't know how to do this business. So it's not true, because after 2 years, we're already profitable. Now we are in year 5, looking more exciting. As you build more and more stores, I think your GP margin get better and better. The figures all get better and better. So we're not so worried about competition. At the end of the day, what we are offering is, as we got more stores, and then we are food-based, F&B in nature, we offer to reduce people's inconvenience. And that is a very important concept, because then nowadays also with COVID still around, that level of reducing people inconvenience increasingly very important. So a lot of people buying RTE, take home, or then and all those things, and ice cream. And then coupled with the fact that last time we are a lot of mall and all those things. So increasingly, the business model now is in the tier two city, in towns, and in the rural areas. So and that helps because places like Tolo Intan, Tanjung Karang, and all those things, so business are quite good. In fact, some of those rural areas, daily turnover is much better than the city. So don't look down on those small towns. They actually they have better what do you call that? They have disposable income is more than city people. I believe. As far as competition like CU and all those things, we don't really treat them as a threat, but I believe as a personal consumer, personally, I think all these things is good for the consumer, give them something different, so if they can produce very good food, why not? You can still give them some business, more. This will help Malaysian consumer to experience more and more new things like that. We are not that worried, not now. Okay.
Freddie, there's a follow-up question there in regards to whether Family Mart will move towards a franchising system.
Oh yeah. That thing has been in the management head for a long time, last year or so. So I think it's still been discussed, probably. When they are ready, it will be announced, but definitely you have to grow even more. You need that business model. It's just that what type of business model you want, because there are many franchise model around. So I think easily nowadays the request for franchise model, I think it's in the thousands. I think.
Okay, good to know that everyone has a lot of confidence in the Family Mart business.
Definitely not me. I want to retire.
Okay, good to know that, Freddie. Hope to see you for another few more years while I continue to cover QL stock. Okay, Freddie, can we just have a little bit color during MCO, during COVID? Did Family Mart business as its own slip into losses? Because you highlighted that you were profitable since year 2 and you're already in year 5. Any ability to provide some color on this?
I don't remember.
No problem, Freddie. Take your time.
Actually, I remember only 1 month this financial year where there was a MCO, I think.
Yep.
Right?
Yes. Yep.
June or July, I think, something like that.
One of the months which were more severe than the rest.
It was June this year.
Yep. Last year.
June last year. Actually, we were doing well in April, May, and then June. Something happened and all those things. A lot of closure, cross-border thing, and after that, June was a loss. July was a profit, and after that, August, September, October, November, December, all doing very well actually.
Okay, that sounds very good.
1 month only.
Only 1 month of losses, which sounds very positive. Yeah. So should we look forward to QL taking Family Mart into separating Family Mart into another segment thanks to, I believe, 10% of revenue, of total group revenue by then?
Yeah, 10% is calculated according to IFRS. It has been calculated on the gross basis, means Family Mart plus the QL kitchen. No elimination of Interco. Both the turnover must exceed 10% of the group turnover. Also, no elimination. I believe this year we should do near 5 billion, and the gross it up is about near 7 billion. So Family Mart turnover should be close to 700 million if we want to gross it. What do you call that? Disclose it separately.
Okay, Freddie, thank you for that information. Sounds very positive. 700 million alone for Family Mart is a very big number.
Family Mart plus the kitchen.
Central kitchen. Okay, Freddie, can we have a little bit idea in terms of the litigation issue faced by your plantations in Indonesia? Has the issues been resolved? What should we be looking forward to in terms of the losses experienced by your plantation segment?
Plantation segment getting better and better now. Let's look at the legal suit. Of course, that gives us some negatives. Governance on our governance. So far, the Indonesian case has been to be in the process to be transferred from the Eastern Kalimantan to Jakarta court. But in terms of the arbitration case in Singapore court, Singapore, we have already got judgment from Singapore court, so that they goes against the JV, spirit of the JV. So now that judgment was given to the Indonesian court, so it's in the process now.
Okay, how about for we've seen some losses to the plantation businesses. Has that active forward contracts been resolved? What has been?
Most of it has been resolved. Indonesian plantation is quite profitable now. The only thing is our CPO mill #1 in Tawau, lack of workers. So mainly due to that, yeah. So it's still in the loss. So but with contribution from Boilermac, I think the POCE will be quite good going forward for this financial year.
Okay, Freddie, just now you divulged a little about the long-term targets of QL. You spoke that potentially Family Mart might even be bigger than MPM as a group contributor profit-wise. What is the target time frame you're looking at? 5 years?
I'm talking about turnover. Okay.
Turnover. Okay. Just turnover. Don't scare me.
Profit, okay.
Profit. Okay, turnover. What?
Definitely in terms of margins, I think we are doing much better than the competitors.
All right.
Yeah.
But there's still room for margin expansion?
Yes. Especially when your product mix is more towards food and RTE, all from your kitchen and all those things, and you with vending machine also look exciting. Yeah, the margin definitely is much better than the existing players.
Okay. Freddie, bear in mind that we have some space in the CGS-CIMB office for one of Family Mart's vending machine, so we can have a chat about it later.
I don't know that one. Now it's all collaboration with Shell. Probably collaborate. I think the target is another, I don't know how many hundreds of vending machine. But then definitely, I believe EPF also requested for Family Mart to be open in their proposed new office. I think.
Yeah. We have some space in our building, CGS-CIMB building, which is next to current EPF office.
Okay.
All right, Freddie, can you just have one last question? I believe so. Can we have an understanding out of the total product mix in Family Mart stores? How many % is actually sales of RTE products?
I think overall the F&B at least 71% of F&B, with food at least half of the 70%.
Okay, I understand. So basically, F&B sales are 70%, which half mainly coming from hot food.
Yeah.
All right, that's very good to know. Again, Freddie, thank you so much for joining us today.
Just maybe, Walter, just one final question from the Q&A box here. Freddie, can we understand if your revenue streams from the export market had been impacted by the port congestion during the lockdown?
Not really. Not really. Not much impact. Maybe the one to China when they lock their ports, so we just divert, no problem. The impact is quite little, because when you come to frozen prawns and fishball related product, it's easily sold. Not a big issue. And then of course at one time China, to go in there you must have COVID free and all kind of sanitation, all these things. You myself don't sell, just divert. Luckily, there are many Chinatown in the world. Don't worry.
Okay, thanks, Freddie, for that. We've come to the end of this session. I would like to take this opportunity to thank Freddie and team for the presentation and taking the time to speak with us today. We also like to thank all investors who have joined this session. I would like to pass over to my fellow colleague, Mr. Vincent Ng, to host the next session. Thank you, Freddie.
Thank you. Bye-bye.
Bye, sir.
Right, so thank you very much. Vincent, over to you for the next corporate presentation by Bank Islam Malaysia Berhad.
Okay, thanks, Rasdan. Good afternoon, everybody. My name is Vincent. I'm the banking analyst of CGS-CIMB. I will be your moderator for today's session. Welcome to Bank Islam session for Invest Shariah Corporate Conversation. We are honored to have Encik Azizan Abdul Aziz, the Group CFO of Bank Islam, with us today. We will start today's session with a short opening remark from Encik Azizan. Over to you, Encik Azizan.
Okay, Assalamualaikum and a very good afternoon, everyone. My name is Azizan, as being mentioned by Vincent just now. I couldn't see myself in the camera, but I'm not sure whether all the other people can see me or not. As being mentioned, I'm from Bank Islam. So this is the first year of our listing, actually, because we just got listed last year. It's around October. That's the listing date of the bank. Previously, we were under the umbrella of PHB, together with our sister company, which is Shariah Takaful. But now we are separated, basically. But we still maintain as a very good commercial and also a business partner with our ex-sister company, which is Shariah Takaful. It has been a very challenging year, undeniably, for us in 2021. It's still going to be a very challenging year in 2022, but I can see there's a bit of optimism in 2022, mainly due to the opening of the economy, and also when you can see that the activities has been going into a rapid kind of movement as compared to previous year, and also the opening of certain sectors within the economy, right? Things that we can learn from last year is that challenges can come from every angle. And we thought that we have passed through Spanish flu last time, and suddenly we have this pandemic coming. We also have our 2008 financial crisis, and before that is 1999, the Asian financial crisis, and then 1997, that's when it started. And from what we gather, based on our discussion with our economists and a few peers within the industry, is that VUCA is something that is going to be here to stay. Yeah. So the volatility and uncertainty and ambiguity within the market is going to be here for a longer term. I mean, it's something that's going to be permanent. And the other thing that we are also understand and we also appreciate is that the adoption of technology that is relevant is very much important. I mean, we can have a lot of technology within the market and what we can buy. But what's more important is that those technologies need to be relevant, and we need to include human within that as well. And when we want to develop something within the bank, when we want to introduce new technology within the bank, we also think about the human side of it, because there's something that we can't really deny, very much important. So these are the things that really affected us, and nevertheless, we are very optimistic moving into 2022, and it has been a good ride for us since listing, and we have gone through all this exercise as well as the challenges and also the process that needs to be done. So Yeah, that's all from me, Vincent, for opening statement. Perhaps I'll leave more time for Q&A. If there's any question from the audience.
Yeah, Encik Aziz, I'm sorry. Okay, I'm just about to say we cannot see your face.
Yeah, I think something wrong with the camera. Sorry about that.
Okay, so all sorted out. Okay, excellent. Thank you very much. All right, pass it back to you, Vincent.
Okay, thanks a lot, Azizan. Azizan. Okay, okay, now we proceed to the question and answer session. And to ask questions, you can press the raise hand button, or alternatively, you can post the questions in the Q&A box, and I will ask on your behalf. So shall we have the first question from the floor? Or maybe I can kick off with the first question. Azizan, I mean, can you update us what is the latest percentage of your loan which is under repayment assistance? I think the figure we have gotten from Bank Islam was about 42%, which was divulged during the analyst briefing in August.
Okay, all right, because there are a few stages of assistance that are being given by the government, right? Because the first one is the blanket moratorium, which is in 2020, if you remember that. And come 2021, we still have another round of assistance, but it's on an opt-in basis. When we are talking about 40% and above, those are from the legacy blanket moratorium, right? And when it comes to the opt-in, when we first thought that it's going to be, perhaps we are estimating around half of that should be under this new assistance that being introduced by the government, but we were wrong. Actually, the number is way lower than that. Actually, when it comes to the toss or the amount of standing within the bank, right? So, all in all, although we still have a quite significant amount of borrowers which are under the moratorium or assistance per se, but the number is going down. I mean, after the blanket moratorium expired, so we go into the new set of assistance program. So the number has gone down. So it is less than 20% now, based on the latest data that we have.
Okay, thanks. We have a question from the Q&A box. The question is, how many of Bank Islam personal financing portfolio is extended to civil servants?
Okay, the percent, in terms of percentage wise, from the value of the amount that's being disbursed, is around, usually based on the latest data that we have, is about 63.5%. These are for the civil servant, and the remaining are mainly to the professionals. They may not in a civil servant kind of sector, but they are into professional services, for example, doctors, the engineers, the accountants. Yeah.
Okay, thanks. Just a follow-up question for the loans to civil servants. How is the competitive landscape there? Which means that who are your major competitors there, and are other banks in that space or not?
Okay, when we are looking at civil servant, I know that basically the credit risk is quite low. I mean, that's the perception, right? So that's why there's a lot of players out there are looking into this particular segment within the market. But when we are talking about our competitors, one of it definitely is Bank Rakyat. That's our main competitors for this segment. And secondly, we have the likes of BSN, Bank Simpanan Nasional, and also we have Bank Muamalat. If you are looking from a government sector kind of borrowers perspective. But to add to that, we have also other banks who are interested to come and to penetrate this market. For example, RHB and also CIMB. Although maybe in terms of the ticket size is not as comparable to ours, theirs is more into high. For example, if it's HFA, they are more into high value kind of property as compared to us. We are looking for the property which in the range of 350,000 to 700,000 perhaps. But for the banks like CIMB. Maybe they're going slightly higher, maybe around 1 million to 1.5 million kind of segment. So yeah, that's how the segmental of our HFA is being formed for this particular segment.
Thanks. Can you share with us what's the average growth rate for this loan, which I mean the loan to civil servants in the past few years?
All right. Okay. Interestingly, we thought that it's going to be a saturated market. We thought that the growth is going to be flat within 3 to 4%. Eventually, when we come into 2020, the growth is about 8%. And last year, in fact, it's still an encouraging figure, which is about 6% for this particular segment, which is way above the estimation that we have. We thought that it's going to be flat around 3 to 4%.
I think this is over, I mean, ahead of the increase in the salaries for the civil servants. So do you think that you are gaining market share in that space?
In terms of gaining market share, perhaps slightly, yes. But we still have the main competitors, the like of Bank Rakyat and Bank National. I think their market share is quite comparable to us still.
Okay, thanks. Any other question from the floor?
All right. This question is the most, I think, the favorite question being asked by a lot of people in terms of salary deduction. Yeah.
Yeah.
Okay. In terms of salary deduction, it's above 60% actually. For our, I mean, across the board for our financing. In fact, our personal financing is also above 60% is under salary deduction. Usually it's over around 68% to 72%, but I would say that it's definitely above 60%.
Okay, thanks. We had two more questions from the floor. The first question is just to clarify the 63.5% for civil servant. Did you include GLC employees? If yes, what's the figure excluding GLCs?
Actually, this one is excluding GLC. If we were to include GLC, it's going to shoot up to 70+%, actually. These are the people who are really related to government agencies or government, in the state governments, and also all the jabatans within the government. But if we were to include GLC, because this, I believe that, I do appreciate that this can be a blurred kind of segregation between government-related or government-linked or government-controlled kind of definition, right? But if we were to include the likes of Petronas, which we consider as GLC, and the likes of companies such as CIMB perhaps, one of the GLC, so it's going to shoot up to 70% plus in terms of the composition of this. The borrowers for Bank Islam.
Okay, thanks. The next question is, can you update on the URUS applications?
All right. Unfortunately, when we are talking about URUS, we thought that it's going to be a popular kind of incentive that we introduced by the government. In fact, when we look at the application that being approved by December of 2021, it is less than 150 actually. So it's very low, and the numbers is quite negligible because we already imputed and we already estimated what kind of modification loss that we are going to suffer from this URUS kind of incentive and program that being introduced by the government. But the number is not really encouraging in terms of the application actually, and the approval is very, very low. So I think we still need to wait until the expiry of this URUS program. I think it's by the end of, I mean, they can still apply until the end of January, right?
Yes.
Yeah. So we need to wait for that. numbers to come. But if you were to ask about the numbers as at the end of 2021, it's quite low actually. And I don't know why is that, but it is very, very low. I think because of people are quite afraid, because this thing will affect your credit rating, your securities, and so on. It will be tagged in your securities.
Actually, I talked to a few banks and they have given the same answer as well. And probably the reason for that is because firstly, the successful applicants have to attend courses or counseling with the AKPK for about 3 months, 6 months.
Correct.
So there is a cost in terms of time for the applicants.
Yeah.
Right. And then on top of that, I think the economy is recovering. So I think less and less people need assistance like that.
Yeah. Plus, it will affect their secrets. I don't think people want to affect their secrets as well. Because once you are under AKPK, I mean, there's tagging into your secrets. That's a bit of a deterrent for them to apply as well. Yeah.
And on top of that, I think banks make it stringent, whereby the applicant have to prove that they actually have lost the job or they have lost like more than 50% of their income. So it's not like a free money for whoever apply for that.
Yeah. It's not like the blanket moratorium anymore. Yeah,
it's not like the waiver as we have seen in 2020. We just gave to all the borrowers for the fixed rate loans.
And it's a very good step as well, because we try to avoid the moral hazard coming from the earlier blanket moratorium actually.
Okay, sure. Okay, the next question is how much provision had Bank Islam set aside as a percentage of exposure for a particular oil and gas borrower with audit issue?
It's quite significant actually. We can't really disclose it just yet because our numbers is not yet issued, and we are still in the midst of our year-end audit, and it's not yet finalized. But I can say that it's very significant, and we are being very, very prudent. We are benchmarking it against all the other banks as well, who are exposed to this one particular oil and gas. And like I said, we would like to, I mean, as you know, Bank Islam is always being very prudent. In fact, our management overlay is quite huge last year that we put in, even though that if you look at the data, we have the rights or it warrants some right backs. But we do feel that with the uncertainty, we are not going to do that. So that's why with this particular borrower, we are going to have that prudent approach again. And we are in the midst of discussion with our auditors. In fact, the regulators also keep on asking us in terms of what's the approach. They are quite happy when we issued our third quarter numbers, because we already put some significant provision during the third quarter, and we top up again. We believe that we need to top up again in the fourth quarter, which is going to be the annual aggregate kind of provision for this particular borrower. I cannot mention the percentage or even the quantum just yet because our numbers is not yet out, but I can assure you it's going to be significant and prudent in our respect.
Regarding the management overlay, I have two questions. Firstly, can you update us what is the total management overlay which have been provided as at end of September last year? And secondly, if there is a write back, how soon do you think this will happen? Will it be this year?
All right. Okay. This is also another favorite question from the analyst, Vincent. Okay. The first question is, it's more than 260 million in terms of our management overlay. This is on top of the ECL that the model provided, right? 162 million. And in terms of how soon can we write back, we foresee that it's not going to be this year.
Okay.
The earlier, perhaps, is 2023.
Okay, sure. Or maybe I have another. Sorry.
I know that some banks, they already do some write backs, right? In fact, in 2021 itself, if I'm not mistaken. True that, right, Vincent?
I think not many at the moment. So most banks are quite cautious because we don't know how high the gross impact loan will go up to by this year.
Correct.
So I think a lot of banks are still taking a very conservative stance for that.
Yeah.
Okay, the next question is why was I think this is a bit like hard to answer, but why was Bank Islam share price declining in mid-October before budget 2022, and hence unrelated to Cukai Makmur in November? Who was selling? Or maybe you can just give your opinion of or anything that you think you can tell us.
And I think sometimes it's because of certain major shareholders, they would like to take up profit. And then, of course, they do have the capacity to really sell it off in the market in a big amount. And of course, when you have a flush of supply within the market, the price will be pressed down. That's one of the reasons. And secondly, perhaps they are expecting, because we did declare our dividends, right? And of course, when people know that DRP is as part of the program, and they are expecting that, okay, if I make some profit now and then I repurchase later through DRP, then it's going to be advantageous for me. So that's one of the sentiment. Perhaps I think that's just my personal opinion. It's not my organization opinion, but that's from my observation. And of course, in October, we just listed, but that one is because, first of all, okay, that's the first thing. First of all, people thought that why suddenly Bank Islam share price dropped so much as compared to BHB, because they always thought that BHB and Bank Islam is the same thing, it's just a transfer of this thing. But it's not, because within BHB, you have Syarikat Takaful share price in there, embedded within it, right? That's why when we do our distribution of the shares, we have 4-to-1. For example, you will get 4 Bank Islam shares and 1 Syarikat Takaful share, and Syarikat Takaful is already 4 ringgit plus in terms of the price itself. So when we do our calculation, actually Bank Islam share should be around slightly above 2 ringgit if we were to strip out Syarikat Takaful when the listing happened. So when the listing happened, actually all of the shareholders are making profit, to be honest, and the share price shoot up straight away to 2.80 ringgit if I'm not mistaken, if my memory didn't fail me. And of course, after that, some profit taking happened and the share price dropped a bit. There's always announcement and anticipation of the Cukai Makmur. Of course, this all again affected the share price, put more pressure in terms of the numbers there. And that's my personal opinion, Vincent.
Okay, sure. Just now you mentioned about dividend. Can you guide us for the dividend policy for Bank Islam, and as well as the frequency for declaring the dividend over a year?
Okay. Usually we always pay dividend once per year, right? And then if you look historically, we only have interim dividends, and that's it. I mean, even for BHP last time, Bank Islam will pay their interim dividend to BHP, and BHP in turn will pay their dividend to the shareholders. That's how the flow is. And our dividend policy is always we can pay up to 50% of profit after zakat and tax, and that's going to remain. But more importantly, in any situation, any banks need to get Bank Negara blessing in terms of dividend. And if you look at during a very difficult time, Bank Negara will be a bit more stricter, or a bit stricter in terms of payment of dividends by bank, and that's why they put a certain threshold that we are able to pay dividend at which amount and at which kind of quantum, right? So it all depends on a few circumstances, the economy, the profit after tax. Of course, our policy is always about 50%, up to 50% of profit after tax, and anything else is subject to the board as well as our regulators' approval.
Okay, thanks. Okay, the next question is that for the particular oil and gas account, will 100% provision eventually be required?
Okay, if we were to look sensibly, right, in terms of any situation of any company is going down, or for the lack of better word, gone bust, right? There's always some value that we can extract from the process of liquidation, or even the selling of assets and so on, and settlement to the creditors. And of course, the creditors also come with different type of franks within that, right? So at this juncture, it's very difficult to say because there's only limited information that's available. Even Winston, if you ask any banks out there, it's very limited information that we can get and gather from the market on what's really happening until a full conclusion that we can get from all these conundrums and all this information or information overload that we have in the market is being included. Then only we can really ascertain what sort of the accurate provision is needed. But when I say accurate, is reasonable, because in terms of accuracy, in this type of situation or in this type of case, it's quite difficult. So 100% in a total loss case, from the historical perspective, is quite difficult. It's for it to go to 100% lah, to be honest, because there's always some value that you can extract from the process. But it's not, there's nobody stopping you from providing 100%, but it's just a matter of whether it's going to be reasonable or not.
Okay, thanks. Okay, the next question is, can you share your view on the net financing margin outlook for this year? Any further room to increase asset yields other than the OPR high and lower funding costs?
All right, in terms of net asset or net income margin, thing that we are looking at is in terms of course, Bank Islam is always above 2.2% in terms of our net income margin, right? So what we are looking at is to enhance our non-fund-based income. This is to say our fee-based kind of income. We have a good trajectory in 2020, just before the MCO happened, and then all the traveling being stopped and so on. So we don't have much of an income from our BDC, but we hope that for this year it's going to reopen and we can get more from there. We also try to maneuver in terms of our investment income. This is our treasure asset. Try to see what kind of opportunity that we can have and we can realize in order to enhance our income for this year. And of course, if you are talking about our fund base, we try to have more proactive repricing of our liability side, in deposit and so on. More strategic in terms of managing the composition of deposit from institutional versus public or retail. That's the thing that we are looking at currently. So enhancing our non-fund base, proactively managing our fund-based costs, as well as looking at strategically more in terms of realizing where we can in terms of our investment income. So those are the three areas that we are looking at.
Okay, thanks. Next question is a bit tricky. I mean, what measures is the management taking to ensure that Bank Islam commands a rightful valuation, meaning that pushing up the price to book to more than 1 time?
I mean, the price of a share, you mean?
The price to book of the
price
share.
to book. Okay.
Yeah, okay.
Right. Okay, in terms of share, right? Okay, because I came from a valuation background previously. In terms of share, it's very much it's a combination of a lot of things. First of all, the performance, your P&L is definitely within our control, some of it, but of course the market movement and also policies and also political situation is beyond our control. Those are the things that perhaps we can manage, but in terms of the control itself from our side is a bit minimal. But those things, for example, cost-cutting measure, right? Cost rationalization, in terms of relook into what sort of investment that we need to make to enhance our efficiencies and also our infrastructure within the bank. That's something that's within our control. So those are the things that we are looking at from the management perspective. Cost rationalization, we managed to save, I think, near to 70 million last year, rationalization. And in terms of looking at our IT blueprint. That's something that we are looking at, how to make it more efficient. It's not just talking about our back office function for IT, but more in terms of how we enhance and leverage on technology moving forward for the next 5 years. And this is something that we already embarked in terms of getting the right people, right advisors to look into our IT blueprint. And we are very committed to go into this space as well, because I think the bank of the future is not something that really similar to what we have currently. And if you know that, Vincent, you are coming from banks as well. Sure. I think in terms of the branches, yes, it costs you a lot having branches, but in terms of the traffic currently, it's not that many. And then it has been reducing. And the change of generation and population, the demographic also has changes. People are more comfortable not to go to branches. They are more comfortable to go go to your handphone, look into your app, transfer your money, or even make payments. So these are the things that we need to look at, the change of demographic and so on. So, and the other part of it is managing the share price. Of course, the sentiment is something that, like what Vincent said, is quite tricky. We seldom that we have total control over it, but we will definitely manage it where we can. And of course, in terms of communication to our shareholders, it's always been very transparent. Like I said, in terms of the question that being asked about one particular oil and gas company, yeah, we are being very transparent. In fact, we are being very prudent when it comes to our treatment of certain accounts, and also when it comes to managing our buffers. But of course, when it comes to buffers, we need to know that how much is good, and then it's not going to be too high, because nothing is free in this world. We need to really be mindful of that as well. So yeah, to answer your question in a nutshell, we try to control where we can and also manage where we can from a management perspective. Technology is definitely something that we're looking at. The way of working, definitely. Branches of the future is something that we are working on that as well. And also the communication to our shareholders.
Okay, thanks. Just now you mentioned about a cost reduction of about 70 million last year. I have a few questions on that. Firstly, where does the cost saving come from? Secondly, what's the target of cost reduction for this year? And thirdly, any target for cost income ratio for this year and the longer term?
All right, okay. Okay, there are 3 questions there. First of all, where the cost coming from? It comes from various areas, to be honest. For example, our marketing expenses, right? That's one of it. We know that for sure through the conventional type of marketing is not going to happen anymore moving forward. So we are going more into social media space. That's where we are trying to cut the cost for our marketing expenses. That's one. Secondly, the rental of our branches and so on, we renegotiate with all our landlords, try to get a better pricing. And of course, we do put a commitment that, okay, we're still going to be your customer, or your going to rent from you basically for the next few years. But if you want us to be committed, we need to have certain good pricing. And then we also have certain branches that we have closed down, I think less than 5, but this is a gradual process. It is an ongoing process moving forward. We're going to have a lesser number of branches. Yes, that will contribute more in terms of our cost reduction, because when you open any branches, there's always a cost associated with it, right? With electricity, utilities, the staffing, and so on. So when you close branches, of course, you can save a lot from it. And another thing is e-statement. Okay, I do admit that Bank Islam has been quite late in terms of adopting e-statement. And as you know that Post Malaysia always increase their rate on a yearly basis. So this has affected us a lot actually. When I came in 2019, the first thing that I look at, okay, how come we don't have an e-statement? I mean, that can save us a lot, right? And sending physical statement to each and every customer, it is costly nowadays. So it is not something that we want to continue with. So we are looking into cutting it down to just e-statement. Hence, we can have a huge saving from that. And another thing is utilization of spaces. In fact, some of the spaces in our office, we lease it out to other entities, and then we can get a rental income from that. Because we know that with the flexi working hours, there's always a space or opportunity for us to reduce the cost. So these are the 4 areas that really contributed to the 70 million of saving. And I do believe that moving to this year, we are looking at the same numbers again, at minimum, something that we are committed to do. And for our cost to income ratio, actually, we are targeting below 53%, right? But as you know that Bank Islam also need to make investment in terms of our technology and our infrastructure. This is to enhance the utilization of our technology and to leverage on the new way of doing banking. So perhaps in this year, we can reduce slightly in terms of cost to income ratio as compared to 2021. But our main target is definitely we want to go below 50% in the next 3 years, 3 to 5 years. Yeah.
Okay, thanks. Can you update us what's the existing number of branches and what was the number about 2 years ago?
Okay, let me check. Yeah, because the numbers have changed. Let me check. Just bear with me for a second. Because
Sure, no problem.
I'll get back to you.
Yeah, no problem.
Sorry.
Or maybe just a rough number.
Okay, it's about, if I'm not mistaken, 2 years ago is about 132, if I'm not mistaken, and now it has gone down to 126. But I need to get the final number because there are movement from the number of branches that we closed down and merged as well.
Okay, thanks.
Sorry about that.
No problem at all. The next question from the floor is that any other potential lumpy provision except for the oil and gas name?
Okay, we are in the midst of audit, and then we have discussed certain account and so on. I can say there's none. That's the only lumpy account that is affecting us.
Okay, thanks. Okay, the next question, do you see loan pick up in the 4th quarter? I think it's loan growth. If yes, which segment? And do you think the loan growth would be back to the pre-COVID level this year?
All right. The first question, yes, we see a lot of disbursement in December. And then most of it coming, if talking about growth itself, is from personal financing. Maybe because it's quite seasonal. Usually when it comes to year-end, people will start spending, or maybe they need some planning for the next year for their own spending. So that's why we can see that PF surge in terms of the disbursement. And we do also see some slight growth or uptake in terms of our HFA as well, house financing. This is mainly due to the redemption from other banks. So that's why we can see that there's some growth in this area. Going back to pre-pandemic, I think this is very much a crystal ball for everyone. I can say that in 2022, perhaps it's not going to happen just yet to pre-pandemic. I would say that 2023 is high possibility. Perhaps it can go back to pre-pandemic kind of growth and expectation.
If you look at the historical trend for loan growth for Bank Islam, it has been consistently the highest in the sector, and it has been like more than 2 to 3 times of the industry growth. But if you look at the year-on-year growth as at September, it had been down to about 3.8%. Do you think this is a hiccup because of the lockdowns, or should we see this as a new norm for the loan growth?
Okay, I would say that it's a hiccup because when we look into the fourth quarter, suddenly it surged back up. First of all, because I think this just based on my discussion with my business team, perhaps people are being very cautious in terms of their spending and getting or buying big ticket items due to the MCO. And of course, the optimism within the market has been quite low when it comes with the MCO and also not so promising GDP growth that being reported. Those are the things that are really playing into the mind of our borrowers as well, I believe. And when it comes to the fourth quarter, there's a surge of disbursement for personal finance and also HFA. I can say that it is a hiccup, and I believe that the growth will come back, although it's not going to be to pre-pandemic level, but it's going to be encouraging in 2022. That's the view that I have.
Okay, thanks. Or maybe I can ask another question for loan growth. If you look at the SME loan, is pretty small, about 3%, 3 to 4% for the overall loan size of Bank Islam. So any plans to increase the proportion for SME loans?
Yeah, we do have that ambition actually. I mean, we are looking around between 500 million to 1 billion of disbursement for for this year. But there's a lot of things need to be done as well from our side. For example, our back office needs to cater to our SME customer. For example, in terms of approval, in terms of what sort of demand of products that they would like to have. That's something that perhaps Bank Islam need to improve on. We see a lot of opportunities within this area. Our SME team is building up since 2020. So we do have a specialized SME team. And in terms of segmenting our SME as compared to corporate and commercial, we need to understand that the approval process should be looked at differently. And the risk assessment needs to be some kind of specific to SME. So these are the things that if you look at Bank Islam, we are never famous or never, people never associate us with SME kind of financing in the past. But we do think that this is the way forward, and SME is always be the backbone of the economy of any country. In developed country, is definitely between 55 to 65% of the economy is being made by SMEs. So Malaysia is definitely lower than that, but it's growing. It's something that we need to look at. But yeah, we do have a lot of plan in the pipeline, and we do engage the market, work together, collaborate with some of the association of businesses. These are the initiative and also the steps that be taken by our SME team. And also we try to really gauge the market, what's really happening on the ground floor, and see how can we help our SME even further.
Do you have a targeted proportion or contribution of SME to their overall loan in the longer term?
Yeah. All right. Okay. In terms of for the first 2 years, we are targeting at least we should achieve 5% of the total proportion of the loan, because we know that we are always within 2 to 3%.
Yes.
2 to 3% is very low as compared to other banks, right? So there's a lot of opportunity that we can see from this area. So we are targeting around 5% for the first 2 years. We know that it is challenging for Bank Islam because we are not known for this area, but it's something that we need to look at it seriously.
First 2 years means this year and next year?
This year and next year, yes, correct.
Okay. Okay, the next question is, would appreciate if Bank Islam can be more active in investor. I think this is a comment, or a suggestion to let more people know about the bank. But this is the reason why we've been arranging this.
Yeah.
Bank Islam should trade at a much higher price with that.
Thank you for the belief, actually. Yeah, I do believe that we need to engage our shareholders, non-shareholder and potential shareholders as well. Yeah, I do believe that. Thanks for the input. Yeah, we'll take note of that.
But to speak as analyst, I believe that Bank Islam have a very good IR because their response time is very fast for any questions. And they did analyst briefing frequently, even during the time of BIMB. So we believe that Bank Islam will continue the good tradition of that going forward.
Okay, thank you.
Okay.
Yeah, we definitely. I have to thank my team actually. The full credit goes to them.
Sure. Okay. The next question is, what is BIMB's view on Malaysian OPR in 2022 or 2023, if possible, given US is going to hike 3 to 4 times in a QT may begin, etc. So,
Okay.
what's our view on that?
Okay, the view is that there's at least one rate hike for this year. And our economists also mentioned that it can be as early as the first quarter, actually. Possibility of 2 rate hikes, it is possible, actually. But
okay.
definitely at least 1 rate hike. Yeah.
Okay.
In terms of profit, of course, there's none lah. But in terms of the cash impact due to the tax, yeah, because we've been paying around 24% effective tax that we paid, about 24%. If it's going to increase to 30%, right? Like we mentioned, so based on our sales, it's going to be around 29% of effective tax rate. Going to affect us. Yeah.
Okay, thanks.
But hopefully it's one-off lah.
Yeah, hopefully. But the government mentioned that it's one-off. Okay, the next question is, could you share how large is your SME team currently?
Okay, our SME team is about 23 people currently. 23 people. Of course, we need more as the portfolio grows.
Okay, I wonder how is the structure of your SME business? Do you have a centralized approval system, or you have SME desk or personnel in branches, or maybe you have SME centers in certain locality?
Okay, currently it's very much centralized, right? Because we only have 23 people who's handling the whole nation. The next step is basically because we do have a business center for certain businesses such as consumer and also our corporate. We want to have this hub embedded within them, some of our SMEs, people there. I mean, people who can be the frontliners of our SME businesses. Basically, they are the face of SME to be stationed there. But still, in terms of the approval and the process and application, I mean, of course, you can go to the hub. I mean, in fact, you can go to any branches to apply for SME banking. But in terms of process, it's very much centralized currently due to, of course, we are not really a big bank in terms of SMEs, and in terms of cost rationalization and from cost perspective, we do believe that having it centralized still the way to go at the moment. But of course, moving forward, we want to have a bigger team and more hubs that can cater SME businesses, and in terms of turnaround time for the approval to be much faster than currently that we have. And that's how it is currently. So.
Okay, thanks. Okay, I think the most favorite topic now is ESG. So can you share with us the strategies and targets for ESG for Bank Islam in the next few years?
Okay, I think the main one is basically, first of all, we are very much and has already embarked towards ESG for the past 2 years. In fact, we have started our journey to VBI, which is value-based intermediaries concept in 2015, in fact. And then VBI is very much similar to what we call as ESG currently, right? Okay, one of the steps that we have taken is that we are trying to embed ESG within our credit assessment process. This is quite tricky because we have never done this before. We hired a consultant, a global consultant, basically. They have helped some of the global banks within Asia and also in Europe to implement or embed ESG within their credit process. So that's one. We hope we are able to launch it by later this year, this credit scoring methodology, by having our ESG in there. Secondly, of course, we also have our Sadaqah house. This is very much as transparent. It's a corporate social responsibility, right? We are trying to collaborate with some of the NGOs and also Majlis Agama, being an Islamic bank, of course. We collaborate with them in helping some of the underserved within the market, try to get traction from that particular segment also. And for the long term or long run, the strategy is to convert them from underserved into a bankable kind of population or kind of segment. That's another one, right? So we have ESG for credit scoring. Our corporate social responsibility is also there. From our investment management, we are collaborating with Arabes. In fact, they already come on board, helping us in terms of introducing certain funds, which is very much ESG in nature. So you can be confident and convinced that these are very much ESG type of funds that we are investing in. That's the third one. And fourth one, if you look into our portfolio, right, we are very much supportive of renewable energy kind of customer or investment that we made by customers. So we have quite a lot of disbursement relating to solar power. So we are very much supportive of this. In fact, we are one of the highest bank that make a disbursement for this particular sector or segment in the market.
Do you have the latest numbers for the size of that in terms of the financing?
I don't have, but we can share with you later on, Vincent.
Sure.
I don't have the number. We did share with the analysts in the third quarter, but we can share with you the latest number for that. Sorry about that.
No problem.
Another one, if you look at our portfolios of financing, we are near to 0% carbon-related lending, basically. Not carbon-related, more of coal-related. Sorry, it's coal-related lending. So we don't have any coal exposure from our portfolio. So we're trying to do that. But again, when it comes to ESG, people always go for environment, but they've forgotten about the social, right? Because when I talk to people is that, for example, if a country, the main business or the main backbone of the economy is fossil fuel, can you say no to, for example, an oil and gas company come to you to look for borrowings? Because if you don't, let's say all the banks say no to fossil fuel producer or fossil fuel sector, it will affect your social, which is people will lose their job, and the trickling effect will continue again, and then it's not going to balance out the ESG part of the initiative anyway. So that's how I see it. It needs to be a holistic approach. We need to balance it out, and then we need to know which part of the economy that will be affected, and make sure that the conflict within the E, the S, and G is being managed properly. For example, palm oil. Yes, currently we are looking for MSPO rated borrowers only, to ensure that yes, we are going to lend to our palm oil producer or palm oil sector, but we need you to be responsible as well. Yeah.
Okay, thanks. I think we have time to take another 1 or 2 questions. We already have one in the Q&A box. The question is, can you guide the ROE target for this year and for longer term?
Okay, our ROE target is always above 10%. For this year, we are going to achieve that. I think it's about 10%. But if you are talking about longer term, of course, the aspiration is for us to reach 15%, right? But at the moment, yeah, we always have a target of above 10% ROE.
Sure. Do you see increasing the dividend payout as one of the lever to push up the ROE in the longer term?
Okay, giving out dividend. Of course, when you give out dividend, your shareholder, share cap or shareholders' equity will be reducing. In terms of the cash flow, right? But in a way, it can. But another part of it is it can be capital eroding kind of activity as well, because of course, from a regulatory perspective, we need to maintain certain capital and dividends amount. But I'm supportive of when we feel that we should return more to the shareholders, we should actually. I'm supportive of that, to be honest. And I think even our board members and our management are being supportive. We should return as much value to our shareholders.
Okay, thanks. Okay, any last question for today's session? Okay, sorry, we have one question here, which is the last question. What's the impact on NIM for every 25 basis point OPR hike?
For every 25 basis point. Okay, actually, for every 25 basis point, from historical perspective, our high level kind of study, it can affect positively between 5 to 8 basis points to our NIM.
This is on a full year basis, right?
Yes, correct.
Okay.
Year basis.
And it will be mostly front loaded because of the timing difference.
Correct.
Okay. If there are no other questions, we can end this session. And I would like to thank Encik Azizan for the insightful information. And I would like to thank everybody for participating in this session. So I will pass back the floor to Rasdan for a closing for that.
All right. Thank you very much. A big thank you again to Encik Azizan and Vincent for the very engaging session we had just now. That actually concludes our ISCC 2022. Once again, I would like to thank all the participants and corporates for attending this event. And we hope to see everyone again in July at our flagship Invest Shariah Conference 2022. So till then, I'll end with wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.
Thank you.